All right. So welcome to the series. This is the first of these episodes, I guess, that I'm going to make. I'm going to explain a little bit about why I'm doing this. The whole idea is I'm going to show the truth behind trading and how you can have extraordinary results if you have a proven edge and you're able to capitalize on that edge day in and day out without burdening yourself with too much risk, and by understanding the risks that you're allowed to take per day. So other than this being, like, I guess, a very cathartic experience for me, the reason that I'm doing this and making these videos is because my girlfriend recently has shown a lot of interest in wanting to learn how to trade. And, I can walk her through the charts every day, but to have an actual record of it so that she can go back through these videos and try to learn, I think that it would be very beneficial to her. As you can see, I don't know if you can see on that whiteboard, but she is starting at a very basic level, and I'm teaching her, like, on the chart, we're talking about like inside, outside bars, and then some other things I have to talk to her about are key entries, breaks, like ways to enter, like certain basic order flow stuff, whatnot. But the main goal, yeah, is to, I guess, document my journey from a $5,000 account to a $50,000 account. So my goal is to 10X it. Might take 2 or 3 months, but that is the goal. And I think that before I start, I actually want to show where I'm at currently, because I didn't expect, I was going to, show her the trades on a low level account so that she can really see that it's possible, that you don't need that much money to start. And honestly, for her and for anyone starting, you guys should start with micro contracts. But just as an example, hold on. Or not an example, but more of to show you where we're at in this, I'm going to show you the statistics on this account. So it was funded yesterday, this specific account, and we're trading the ES. So here is the account, and as you can see, the balance is, what you see here. So this is this week of trading. And in this week of trading, honestly, we've been off to a good start. I'm going to explain where we're at right now in the cycle in our strategy to grow this to 50,000. But so far, we've had a pretty good week. Today was a very strange day, and we're going to go through the trades. But I just want to show that I said I was starting out at a $5,000 account, and we did. We're at a total gross profit of 1,400, and as you can see, what it said, 1437, yeah. And as you can see, if you subtract that from this, it's 5,000. So here's the stats so far. We're at 15 winning trades, 1 losing trade, which is not going to be, that's not going to be like that forever. There are going to be losing trades. But we've really been focused, and we've had a clear edge. This is the cumulative P&L curve. One thing I want to say, the reason why this is an outsized loser and these are smaller winners compared to these three, and I guess these, like over here, is because yesterday, so the goal of, let me explain the strategy. The strategy of what we're trying to do is we need to hit $50,000. So you can either do that with one contract, which will take a lot of time, but I have experience trading, and I'm going to show how you can, with the same exact strategy, the same exact edge, how you can scale your size, and you can really compound your growth. So the only loss we took was from today's session, and yesterday we had, I think I can show this, custom time. So this was yesterday. So yesterday we had no losing trades, and we had a total profit of about $800 on 9 trades. So because I'm going to explain my risk again very soon, but because I had a profit of $800, I can use that profit as a buffer to increase size. So I only risk um, on this $5,000 account about 5% per trade. And I can do that because I'm scalping, so the probability of winning is high. So the probability of having multiple losers consecutively is low, just based on probability. And so what I'm doing is I wanted the first day, I wasn't expecting it to be such a green day. $800 on one contract is very good. It's about 16 points of profit. And so I took that amount of gain, and then because I'm only risking $250 with one contract, I then scaled it to two contracts, and then I doubled the amount risked. So I can risk $500. So if I were to have a losing day today, I would have been up only $300, about $300 minus commissions, and I would have had to scale back to one contract and repeat the process until I create a next buffer. But we had another green day today. If we look at today, we had about $650 in profit, minus the one loser, which unfortunate, but it's honestly the win rate is so high that we're going to have to even out at some point, just statistically. But so far, we have a nice buffer moving in. I'm not going to scale to 3 contracts, I think, until around $8,000 account, or maybe 10,000. I'm still deciding. And then every 5,000 increment, we're going to scale up even higher. So this is what it's looking like currently. I'll go back to this week. Before I go into the trades and explain all of that, I want to explain what my goals are for this series. So the main goal, which in the trading realm, especially on social media and YouTube, it's so it's so fraudulent, and so it's so hard to verify what's real and what's not. And so my goal for this series is to really have full transparency with you guys and the viewers. And obviously my girlfriend has full transparency because I'm going to show her all this stuff every day. But I want full transparency. I want to show you my trades. I want to show the statements. Obviously I'm not going to show you, my home address and my account number and things like that, but I want to show the balances, give full proof that this is possible. And then, as you just saw on the tracker on the Ninjatrader client site, I want to show the full P&L tracking. And then again, before we go through the trades, I want to explain really, because I have to give credit to the people who have really helped me through this journey. I want to list 4 people who I think that you guys should definitely check out. And I'm not so sure if I'm going to be doing educational series on here because there is such good education, and I'm going to list 4 people who I think are the absolute best. It doesn't mean that there aren't other people who are really good, but these guys have really helped me. So I'm going to go through them as I guess in the order that I discover them. So number 1, Al Brooks, probably needs no introduction. Probably the godfather of price action trading. Actually not probably definitely is the godfather of price action trading. He's had such a big impact on my early journey, on my entire process getting to this point, on my understanding of price action, pretty much all my fundamentals, the trader's equation, understanding edge, all of that. Al Brooks, everyone should check him out. Even if you're a seasoned trader and I'd be surprised if you don't know who he is, but everyone should check him out. Tom Hugard is the next one. Tom Hugard is, he's a high risk trader. He has an institutional background, and he trades very big size on more of a swing trade type style. I know he has a Telegram channel where he trades live every day. I've actually never seen him trade live, but I know that he loves to swing trade, and I really respect his style of trading because he's one of those guys that when he's in a swing trade, he doesn't just sit there and then just determine when to take profits. He adds to his position and he compounds a winning position, and I have a lot of respect for people that do that. And he has amazing videos on psychology, which is arguably the most important thing in trading. And his if you anyone that knows him has probably seen his London lecture. It's about 2 hours to 3 hours long. Absolutely eye-opening, brilliant lecture. Everyone should check him out. Great guy. Then next, the next two guys kind of trade similar to me, but not. I trade slightly different. I trade a mix of these two guys and Al Brooks in more of a. I scalp, so um, it's not quite the same, and I also use a little bit of order flow. But so Mac from priceactiontradingsystem.com, I discovered this guy when I was in college, this gentleman when I was in college. He is the first one that introduced me to, I guess, tick charts before I was using the 5 minute chart. And honestly, 5 minute chart is wonderful, but for those of you who've been trading for a while, you remember when the S&P was only in the 2000s, and now we're almost, as you can see, like it's 7,000 on the S&P. So the ES, sometimes on the 5 minute chart, a bar can be 10 points long, sometimes even 20 points long. And it's really hard to structure your risk around the market when the market structure is so wide. And it's really hard to get good. You can still get high probability, but you can't get good reward to risk, risk to reward. And so Mac was the first person that I saw that was trading the 2000 tick chart. And I usually do trade the 2000 tick chart. Some days, if it's very slow, I'll drop down to the 1000 tick chart and only scalp for a point if the market is very slow. But he has an amazing channel, and he goes through the analysis of his trades and the market structure, I think almost every day, except for Fridays. He's a great guy again. Next is the last one is Thomas Wade. So Thomas Wade, I think he might be a little bit older than me. I'm only 28 right now. He might be in his 30s. I don't want to say that if I don't know, but I think he's a little bit older than me. He's been trading for 10 years. He trades, again, very similarly to Mac and to myself, using price action. I think that he has an amazing channel. If there's anyone that, I think you should learn from for high probability entries and for, just like he has such a good way of explaining things that's very basic, and he simplifies everything. And I think that he has an amazing channel, and that you guys should definitely check him out. And he's a very humble guy. He shows his losing trades, which I hope to do as well. But he shows his losing trades, shows his winning trades. He shows his frustration sometimes when he's in his live scalping series and whatnot. But again, these four guys, I'm going to list them again: Al Brooks, Tom Hugard, Mac from priceactiontradingsystem.com, and Thomas Wade. All three of these guys are amazing, and you should really consider looking into them. So yeah, now that I've, I guess, explained this challenge, what I'm trying to do, I showed you the stats from the last 2 days, and, talked about my influences and everything. I think what we're going to do now is I want to show you the trades that I've taken the last 2 days. So it's my goal that I'm going to do this recap every single day, so we don't have to go through two full days of trading at a time. But for now, just bear with me. If you're interested, you can watch it. If you're not, then obviously, you can head out. But we'll go through these. So this is Wednesday, January 21st, and we will start here. Okay, so I also, before I start, I want to explain something. So on the chart, there's some symbols. So these ones, it's very hard to see probably, but these symbols on the left side, if it's a red, it means a short entry. And then if it's anything on the right is your closing entry. So here's a short scalp, shorted here, exited here. Some other things I want to mention: I use a 20 bar EMA. I use a POC, which is an order flow. Um, uh, it's pretty much the most traded point of the day, which is what this is. If there's anything that you don't understand, please leave it in the comments, and maybe I'll make a video explaining everything on the chart. But every single thing that I have on the chart is extremely deliberate, and I use on a day-to-day basis. Nothing here is like, unnecessary. I use everything. So another thing, I use a little bit of order flow to understand absorption areas. And again, if you don't understand that, please ask me to make a video. I might make one, but there's a lot of videos on absorption. So these circles, if you go into this, so what this is these are markers, and they mark big trading activities at a certain price. So for example, at this price, there was over 100 volume for it to trigger a circle. So each of these, and you can set this to whatever you want. If you set it to a higher number like 150, there'll be less circles. I stay at 100. I think it's a good number. Some days when the day is extremely volatile, you can lower it. I'll lower it to like, maybe 75, or sorry, I'll increase it to maybe like 125, 150. But I use these circles to gauge what the market is trying to do, what the buyers and sellers are trying to do, where the activity is, and if the market gives you a result. So as an example, you can look at this right here, this circle here. The market traded up. There was huge buying activity, but the market went down, which means to me that the passive sellers, the ones that didn't try that hard, got a result without trying that hard, and that these bulls are trapped. So they went long here, and it's a terrible trade unless you held it for a longer duration, but they got trapped. So that's pretty much how I use it, and I'm going to explain more about it if you maybe in a future video, but I just want to go through these trades and explain my thought process. So here we're looking at a trading range, and we had a first entry short, and then again, first and second entries, I'm gonna have to maybe make a video. But if you actually look at Mac and L. Brooks, I think, has a video, but also Thomas Wade, they have videos explaining first and second entries, and they're very high probability trades. But we were moving in this range for quite a bit. We had a lower high here off of this, then another lower high, and it was also a second entry moving below the EMA. So took a short here, scalped out for, I think it was 2.5 points. This one was a beautiful entry. The market rallied, and it wasn't able to touch the EMA for, I don't know, like 30, 40 bars. And we had a first entry and a second entry long off of the EMA with absorption of selling and immediate buying. So the sellers here, as you can see, there's a red circle here. Maybe I should change this. Right here, there's a red circle, which means the sellers were trying very hard to push the market down, which they failed as it came back up, and immediately there was more buying. And if you look left here, there was buying here. So these buyers were supported at these levels. So it just gives you more probability of being right. I think this is one piece of edge that I incorporated on my own. So I think Thomas Wade and Mac trade the same exact way, except they don't use order flow. I combine order flow, as you're going to see some trades like that, but I combine order flow with price action to increase my edge and to increase the probability. It may not give you too much edge. It may only give you, an extra 2 to 3% win rate. But I think that, and anyone that knows trading will agree that 2 to 3% win rate over the course of thousands of trades is huge edge. So as you can see on my entry too, as soon as the price went above my entry, it triggered more buying, which pushed the market higher. And then I got out, at my 2.5 point scalp. This trade I actually did not really like. Let me see why I took this. I think I took it off of this trend line, which was very weak. but I did see huge buying activity occurring here. And as the market came back down, we had a very shallow second entry, first entry here, second entry here. I pretty much, I think, you know what happened? I didn't actually take full profit on this because I was using the order flow to scalp, but I wasn't confident that prices would hit the target that I wanted. And we were also near yesterday's high, which is this green line. And so there might be some kind of rejection here. So I actually took, I think, only 1.25 point of profit on that. This trade was an order flow trade for a point. What ended up happening is I saw that the market was trying to sell off, and there was this bar that hit the EMA and then was rejected with strong buying, and the buyers were completely absorbed by the sellers. So I just went short here, took a point out of that. Let's see. So this is a pure, this is the kind of trade that I don't think that Mac or Thomas would take. And the reason is it's purely an order flow trade, an order flow scalp. This yellow line right here is the POC, point of control, which is pretty much where the highest frequency or like the highest volume of orders are at in a given day. So this is the most traded price in the day. And usually price will bounce off of the POC or move through the POC many times during the day. And as you can see, like you can see it here, it held prices up here, it rejected prices here, and then prices pushed through it once again. This entire trading range was built around the POC. So this was purely a POC trade. So what did I see? So the market is coming down and we are pretty far from the EMA. So this is a kind of a mean reversion trade, but at the bottom of this wick, we had a large amount of selling, a huge amount of selling, and that selling was immediately absorbed, and immediately there was also buying. So if you don't know anything about trading, but you were to just look at this, there was huge selling and huge buying, and the market moved up. So in this battle between buyers and sellers, obviously the bulls won, but they won in a way that it didn't require as much effort. And they were able to completely undo all the selling of these prior bears. So I just waited for some signal, which would be the conclusion of this bar. And I entered and I scalped out for 2 points, 2.5 points. See, this is the kind of trade I think that is risky if you don't understand the context. But we also had this small rally and there was absorption by the sellers here. So I knew that there would be continued absorption if we push lower. This is a very contextual trade that most people probably shouldn't be taking. So let me understand what I did here. So this trade was, we rallied, we had buying that was absorbed, we rallied down lower, we had big buying again, and we had a second entry. So this was the first entry. And then this right here, break of this bar is a second entry long. And we held higher than the EMA and we held higher than this big buying. So, you know, I was actually, this might have been a loser, but I was only scalping for 2 points. So we actually got filled. You know, I didn't understand that this trading range was in play until obviously like around here. So looking back on that, if I knew this trading range was going to be in play, probably wouldn't have taken that. Probably would have waited for the short off the highs. Like this would have been a decent short, a second entry short, coming back down. But that was that. And then we had, this was a really good trade actually. We started channeling up, but I actually viewed this entire area from here all the way to here and the lows here to be one big trading range. So we were constantly moving back and forth. Second entry short right there, scalp out, that one was good. Then we had this huge rally, and honestly, I didn't really feel comfortable trading this because I didn't understand why it was happening, but break even, scalp right here, nothing, I don't even want to, just nothing too crazy to talk about here. Here's a second, or what was this? A failed second entry short. So we tried to, market went up, came back down, went up, came back down, and then it failed. So the market, even after all of these, this big push down, the market wasn't able to push the market down. So I pretty much took a long of the failure, and also saw absorption by these sellers. They tried really hard to push the market down, and all of these buying levels are supporting this. So went long on the break of the EMA, and then also buying activity there. So that was yesterday. Let me go through today. So, I know this is a lot to go through on the first day, but bear with me. We're going to be going through this every single day, a day at a time, so it won't be too bad. I also had to do the intro and shout out some people, some mentors, whatnot. But here is January, 22nd, Thursday. The market opened around here. We had a push down, which was bought, absorption by the buyers, huge selling. So the selling didn't occurred. The selling here occurred without much effort, which means that the buying pressure that was shown here, it didn't produce a lot of results. And look at this. So, this is a beautiful short that I tried to enter with a limit order, and I was not able to get filled because it moved so fast in that direction. But I marked this. This was a beautiful trade. You have the market pushing lower strongly. You have a first entry short and then a second entry short, which is nested in here. So there's no clear indentation, but the market went down here, pushed back up and pushed down off of huge absorption. So big buying with zero result, which means the passive sellers are in control, and also they sold at this level. So this level right here is being held by the sellers. So I tried to enter here, was not able to get filled, and the market moved down. Here again, we had a big push down. This was a measured move, one leg, two legs. Then we pushed up, and this is very basic. Second entry, first entry was here. Second entry was here, coming off of the EMA. What else was going my way? We had this selling activity, this little sell bar or sell circle right here, which confirmed that sellers were trying to push the market down. We were supporting this level where sellers previously sold, but the EMA is confirming here that we might move lower, scalped out of that. Then the day got very treacherous. So we started chopping quite a bit. And if you just look at this bar, this is an outside bar that if you were a long entry and you were going off of, I guess, what would this be? First of all, if you were going off of a second entry long here, you would have been stopped out. If you went after a third entry long here, you would have been stopped out. If you tried to go short here off of a failed second entry here, you would have been stopped out. So there was just a lot of trading range type behavior, which resulted in just very strange price action. I marked these three trades with a diamond as a caution trade. They all worked, ironically. I didn't take any of them, but they all worked, and they were good second entries. But we had this trading range type behavior, and I didn't really understand what the market was trying to do. And the thing is, if you don't understand what the market is trying to do, you can't just take a setup because it's a setup. You need to, have some edge, and understanding is edge. And as you can see, even though all three of these short trades would have worked, the market was quickly bought, and we started moving up. So here, I marked this trading range right here because this was where majority of the prices were held. I took this, what was this? This was a failed second entry short. So we had our first entry short and then second entry short, bought here and then scalped out near the top of the range. The reason why I didn't take a bigger profit here is because I assumed that this trading range was still in play and we would try to get back down. Here, again, this is a buy. I think I concluded around here that maybe the trading range was, starting to fail, but second entry, first entry long right here, second entry long, took that. And then this was the one loser. So ironically, I would still take this trade if I was presented with it. I think it was actually a really good trade. It was just, we were so choppy. But what I saw was a first entry long and a second entry long that failed on this bar. So on this bar right here, the buyers failed to keep the level higher, to keep the price higher. And we also had a huge absorption of buying and succeeding in selling. So all these sellers have pushed the prices down. And so I wanted to, and I assumed that this trading range was still in play. So I was trying to fade the breakout of this trading range. Went short here and I was looking for a scalp down. We got a little bit in our profit, but unfortunately got stopped out. And then here was a second entry long off of the EMA. That's very basic, I think. Not too much to be said about that. This trade I really liked. It was a failed second entry short that pretty much, I mean, I wasn't able to get filled. Actually, I had a limit order at this open right here. So I had a limit order right here. And it actually did come back to my price. But after the market moves a couple of points in your direction, you don't really want to keep your limit order there, because what if this was a triple top? So 1, 2, 3, and it came back down and continued lower. I was not willing to risk that, but it would have worked out if I kept my order there. This was a second entry long, as I said. And then we just started chopping and I stopped trading. I mean, like, look at this. Like, the market is still open. And just look at this. Like, this is disgusting stuff. There's a huge battle going on between bulls and bears. This is just craziness, and I'm just not willing to trade that. So, here I went long, hoping to break the high. I realized it might not have been the best. Took a little scalp. Here, went short off of these buyers winning, an absorption of this buy, these buyers and these buyers. Also looking at a continuation of this second entry short if people were using a wider stop, and scalped out for a point. But this, you can't be trading. I mean, you can if you're using limit orders and using a wide stop, but it's just ridiculous over here. So be very careful. But I know this is a longer video. 30 minutes is quite a long time for a video. But it was my first video, and I'm gonna, keep the transparency high, and I'm gonna keep explaining my trades, and probably with more detail. This video is so long that it's hard for me to really explain everything in super fine detail. But please, in the comment section, if anyone sees this and is interested, ask me questions, and maybe I'll make a video pertaining specifically to what I'm talking about, or I'll even link, some like Al Brooks, Tom Hugard, Mac, or Tom Wade's content, because they make amazing content once again. And, I can make content, but some of the ways that these guys explain things is probably much better than I can explain it. I can try my best though. But I hope you enjoyed, and I'm going to record tomorrow is Friday, January the 23rd. And I'm going to record tomorrow's session, show you the results, edit the 2 videos together, and then we're going to publish it. It's a little bit of a longer video. It's probably going to be like 45 minutes. But hope you find some value in this, and hope that it at least gives you confidence that you can trade and consistently outperform the market and, make money. Like, seriously, just make money if you know what you're doing and you're patient and disciplined. So, yeah. So this is the start to the series, $5,000 to $50,000, 10Xing an account. Yeah, catch you guys tomorrow.